Today, we are talking about mutual funds. Yes, mutual funds, the lazy man's guide to growing your money. And no, this isn't one of those pyramid schemes your cousin keeps inviting you to. I'm going to break down everything you need to know about mutual funds, what they are, how they work, the types available in Nigeria, and how you can get started. If you've been thinking of building your wealth but don't know where to begin, this video is for you. Let's dive in. So, what exactly are mutual funds? Think of it as a group investment. Imagine you want to invest but don't have money to individually buy assets like stocks or real estate. Instead, you and a group of others all pool your money together and hire a professional who invests the money on your behalf. With that, you can understand the basics. A mutual fund is a pool of money collected from multiple investors to invest in various assets like stocks, bonds, treasury bills, or even real estate. These funds are managed by professional fund managers who make investment decisions on behalf of the investor. By investing in a mutual fund, you own a share of the fund and by extension, a share of the profits or losses. For example, if 1,000 Nigerians each invest 10,000 naira in a mutual fund, the fund manager will combine the 10 million gotten and invest it in a diversified portfolio. Each investor will then earn returns proportional to their contribution. And here's the best part. You don't need to have millions of naira to start. Many mutual funds in Nigeria allow you to invest as little as 5,000 naira or 10,000 naira. It's really that accessible. Okay, then experienced fund managers invest the pooled money in diverse assets, thereby reducing your need to research or manage your investments yourself. This also reduces the risk of losing all your money because your investment is not tied to just one thing. Then, as these investments grow, you can earn a share of the profits. This can come in form of dividends, interest, or capital gains, depending on the type of mutual funds you choose. It's really that simple. You're letting professionals manage your money while you go on focusing on other parts of your life. But it's not enough to just throw your money into any mutual fund you see. You have to know exactly what type of mutual fund you're investing in. There are different types of mutual funds in Nigeria, and each one is suited for different kinds of investors. We have equity funds, which invest mostly in stocks, so the returns can be high, but they are also riskier. If you're looking for good long term growth and can handle some ups and downs, this might just be a good option for you. Okay, then we've got the money market funds. These are low risk investments that focus on short term stable assets like treasury bills and commercial papers. They are safe, predictable, and boring. Ideal if you want to grow your money steadily without taking big risks. Third, we've got the bond funds. These funds invest in government and corporate bonds, offering moderate returns with lower risk. And they make for a great middle ground. Then we've got the balance funds, and as the name suggests, these funds balance their investments between stocks and bonds. If you want both growth and stability, this is a solid option. And also, there's real estate funds. If you want to invest in properties but can't afford to buy land or buildings outright, then you can try real estate funds. The funds pool money together to invest in real estate projects, allowing you to get a piece of the action without needing huge capital. All right, so you may be asking, why should I consider investing in mutual funds? Well, let me break it down for you. For starters, there is low entry barrier. Unlike many other investment options, mutual funds allows you to start small. Whether you have 5,000 or 50,000, you can begin investing. Mutual funds also spread your money across multiple assets. This reduces the risks of losing everything, unlike putting all your money into one investment. You've also got the added benefit of professional management. They are basically stress free. You don't need to be a financial expert to invest in mutual funds. The fund manager takes care of all the heavy lifting. Also, if you need your money back, you can pull out at any time. Most mutual funds in Nigeria allow you to redeem your investments at any time, making it easy to get your money when you need it. There's also the fact that it's fully regulated by the Securities and Exchange Commission, the SEC. So you know you're dealing with a legitimate investment. And most importantly, you get steady returns. Now, while not all mutual funds guarantee high returns, they generally offer steady and reliable growth over time, especially if you are investing for the long term. All right, so now that I've sold you on the benefits, you're probably thinking, okay, how do I actually start? Easy peasy. All you have to do is look for trusted fund managers like Stanbic IBTC or AROM or FBN Quest or Meristem. Check their track records, fees, and reviews. You can also check their individual apps because most of these platforms have their own individual apps, or you can access most of them through the Cowrywise app. However, before you commit your hard-earned money, here's a couple of things you will need to do to get the best results. One, research the fund managers properly. Check their track records, fees, and reviews in order to choose the best one that aligns with your goals. Then, actually set your goals. Are you saving for a car, your child's education, or retirement? Knowing your goal will help you choose the right fund. Then understand the fund's objective. Each mutual fund has a specific objective. Some, like equity funds, focus on long term growth, while others, like money market funds, focus on income generation. So once you've set your goals, you will be able to go with a fund that aligns with your goals. Four, start small. Don't overthink it. Even if it's with 5,000 naira, start somewhere. Begin with what you can afford and grow from there. Five, monitor your investments. While fund managers do the heavy lifting, it's still important to check in on your investments periodically to see how it's performing. However, do not overdo it. Know your risk level. If you can't sleep at night because your investment is dropping, then stick to safer options like the money market funds. Here's the thing, investing in mutual funds is not a get rich quick scheme. It's about growing your wealth steadily over time. If you're looking for a miracle, go to church, not the stock market. But if you're patient and consistent, mutual funds can be one of the best decisions you make for your financial future. It's one of the easiest ways for Nigerians to start building wealth without losing sleep or your life savings. Remember, it's not about how much you start with, it's about starting. Start small, keep learning, and don't be afraid to ask questions. If you have any doubts or need more clarity, drop your questions in the comment section below and I'll do my best to help. Now, do me a favor, hit that subscribe button, drop a comment if you have questions, and share this video with someone you know who is still hiding their cash under their mattress. Trust me, farmers don't care about your hard-earned money. Alright, see you in the next video, and remember, investing is like planting a tree. The best time to start was yesterday. The second best time is today.